Good morning, and this is your market update on the 27th of April, Friday. Before we go any further, please could you change the quality here by pressing the little cog button on your YouTube video and moving it to 1080 pixels in high definition. Thank you. And we start with the S&P 500 futures that are finishing a five-wave formation as expected here. We have had a dip in wave 4 down to 1380 just above, and then a rally into the mid to high 1390s. Since then we appear to be having an impulsive drop that goes from 1398 to 1389, almost 10 points, and so far have a little A, B, and possibly will have a little pop in a wave C. TAG is a better seller then against the highs in a very conservative stop at 1399, and better stops possibly would be at 1417. I then expect there to be at least a correction to this impulse, so falling to 1370, possibly going all the way to new lows and lower than 1350 if we had wave A, then wave B, and now we're going to have a wave C. This does not quite go well together with the US 10-year note futures, which appears to, well, not really comply with our bearish forecasts. There still remains a possibility that a five-wave structure has completed from this B-wave low, where what has been unfolding for most of April, the second half of it certainly, is a fifth wave, a fourth wave correction, and a fifth wave. That is possible, but increasingly unlikely. It looks like we may be trending higher in price and breaking out of a triangle, a fairly large triangle formation. A fairly large triangle formation, remember, is defined on a 4-hourly chart as a move that took place during the whole of 2012 as well as the last quarter of 2011, where we have waves A, B, C. This was proposed wave D. However, it is now breaking out of wave C top, so it's possible that we have already begun our ascent to new highs in US 10-year. TAG stands aside. My next analysis is on the dollar yen, which appears to be absolutely jammed against our absolutely iron firm stop loss level of 80.29, and it seems to really want to go higher. We have our A wave, B wave, possibly a C wave here that finished in Japanese session overnight, and a massive, really over yen long shoot higher. This is fairly impulsive. We will see if this will now support a move up to new highs. How this will gel with weakness in global stock markets that we now forecast and strength in US 10-year, I don't quite know. Finally, euro dollar appears to be moving lower in what appears to be wave 1 to possibly a wave 3. We now expect at least a wave 4 pop to 32.10 plus or minus 10 pips, and then if we see another drop down to 31.30 or 31.20, then we have a 5-wave down from the high. This will put us in the bearish camp. Already the current structure is putting us mildly in the bearish camp, provided that 32.50 does not exceed to the top side. If indeed we have a bearish count, it will go as follows. We have our impulse here in the middle of April, wave 1, then we have wave 2 or wave B. Since then we may have had an unfolding C wave diagonal A, B, C, D, E, in which case wave C is over at 32.60 and we go to new high lows below 130. TAG remains very, very cautious with small position sizes, hit and run modus operandi. Crude oil, absolutely no change in our forecast. We continue to expect new highs in crude oil, provided that first 101.85 and then very firmly 180 hold weakness to the downside. And gold, again, as mentioned yesterday, does appear to be basing, certainly against, there is substantial resistance against this falling trend channel, against which we're stalling here. If we break to the top side, we will possibly go into the low 1700s. Your stops, if you're long, should remain here at the low of 1612. However, none can be provided based on the firm Elliott wave principle. Thank you very much for listening.